Well, good morning, everyone. Welcome to our Monday morning trading room. I trust everyone had an enjoyable weekend. Weekends are always so short. Oh, well, such is life. All right, let's take a look at what we got going on here. You can see we're getting some really crazy ranges going on here recently. Comparing the volume to the recent bars, notice how we had some of these tiny bars with really big volume. We actually had a small bullish bar here with relatively small volume. When you see big bars with little volume or little bars with big volume, that's not exactly how volume works. Volume tends to be more of a relative type indicator. And we normally expect big bars with big volume and small bars with small volume. So when that kind of thing begins to happen, we should sit up and take notice, because there's something going on that isn't quite right. At any rate, we're starting to get some big ranges. We're still trading around the same numbers. We're opening with a huge downside gap. So we'll see. Right now, it looks as though the market trying to recover ever so slightly. So that's the daily. That for the NASDAQ, of course. So here we are looking now at the Eagle, and fairly active pre-market. But if we go back here, you'll see this is all the Globex, the overnight, Sunday night. Come on, where's that big move? Boy, I gotta scroll back here a long ways. There we go. At any rate, you can see it better on a daily chart that there's a big downside gap. For those of you who like your first in-sync Eagle signal of the day, I guess this one's it right here, and it's well on its way to its profit objective. So it looks like the buyers are putting in a little bit of a rally. I'm going to try to sit back for a bit and let the dust settle. Okay, can I get a sound check from people, please? Ron's having sound issues. Can anybody hear me? Okay, nope, sounds good. Hold on, let me just let Ron know. All right. Okay, Andrew is having some issues here. Andrew, the best way to get a hold of Ben is not via Skype, but rather via email. So hold on, I'm going to put the email address in the window here. It's support@indicatorwarehouse.com. I'll send it to everybody so everybody has it. Ben is not on Skype all that often, but do try him on via email. He's very quick to respond. What you're going to need to do, Andrew, just so you know, what's happening is Andrew has migrated to Ninja 8 and the mean Renko bars aren't working correctly. You're going to need to go to the members area and download the mean Renko's version 2.0. We had to make some adjustments for them to work correctly on Ninja 8. Alrighty then. Okay, Andrew says I can't see them in the download area. Like I said, just send an email off to Ben. He'll get you squared away. Just let him know what the problem is, and he will get you sorted. All right, so let's see. Are they really going to try to get into that gap? We're getting a few conflicting signals. We're getting some buy signals here on the Hawk. We had a nice little first micro macro cross higher right out of the open. Boom, big move up. Now we're getting red bar buys. Now these tend to develop near the end of the trend, although we've come right back now with another first micro macro cross signal. Here we have, coinciding with that, we have a trend change signal in the Falcon. So here, let me show you the signal, because this one might not be a bad one to try, given that the current trend seems to be higher. Let me just get this set up. There we go. Okay, so the trend change signal occurs when your trend line changes color. So we've gone from red to green. Here's the up push that changed the trend line color. Here's the counter move. And then here come the buyers again. And this time we have produced a buy signal. So that's what constitutes a trend change signal on the Falcon. Tends to be a fairly high probability signal. And given the size of that opening range gap and the bullishness that we've seen here out of the open, this first 10 minutes of trading, I might be inclined to try to take advantage of that, see if the market doesn't sneak a little higher. There we go. So a nice little move up there. Look at how many zones, how deep we are here in the support area. Wow. 1, 2, 3, 4. We're trading 5 zones below the primary support, 6 zones below the median line. That's crazy. So one trade there for the good guys. That's us. Now, believe it or not, if your trading objective was to make $100 per contract per day, you've just made your trading target. After that, it becomes a game of multiples. Andrew, okay, Mark's got some feedback here for you. Mark says, I have the same problem not seeing the mean Renkos in the members area. What he needs to do is look at the top right by his name, and there's a drop-down menu, and look for My File Box. The mean Renkos can be found there. Yeah, okay. Here's the thing. Andrew's got a couple questions about the trade manager. The trade manager, as you know, does not work on Ninja 8. The trade manager, unfortunately, only works on Ninja 7. And I have to say it's a bit of a problem still. And unfortunately, it's seeming to be an insurmountable problem. So I haven't heard from the programmer for a long time. I've got tired of chasing him around and listening to him string me along. It's not that we've totally given up on migrating Trade Manager to Ninja 8. It honestly, it just does not look very promising. So what we've done in the meantime is we have developed the trade calculator, which does almost everything the Trade Manager does, with a couple of exceptions. With the trade calculator, we cannot auto trail our stops. That was a nice feature of the trade manager. The trade calculator, we manually manage our stops. However, you can use several different stop strategies. You can use, by default, the ATR strategy. You can use any indicator that plots on your chart as a stop strategy. So everything from, say, a Bollinger Band to a Keltner channel to a moving average to whatever. If it plots on your chart, you can use it as a stop. And you can always use a horizontal line as your stop as well. So and a fixed tick amount. And these values are all adjustable. You can change them as you like. But most importantly, you cap your risk. And here too, you can adjust your risk parameters more or less. The other feature that the trade calculator has that varies between the trade calculator and the trade manager is with the trade manager, you could preset your entry and exit. With the trade calculator, it's a little bit more automated. So a lot of times what you'll see me do is set my entries for the stop orders. And then if I'm looking, say, to take advantage of this signal right here, well, I hover over the buy stop button and I wait for the trade calculator to trade high enough that I can actually engage the order. So I would do it like so. And now I have an active order. I pulled my stop out of the way because these orders are live the moment they hit the chart. And I will bring my stop loss order up as my trade initiates. Now, unfortunately, because the trade calculator is not programmed by the same guy that did the trade manager, we weren't able to give the trade calculator as an upgrade. The programmers, part of the contract with working for Indicator Warehouse is that the programmers are responsible for upgrades. But because the programmer has been unable to upgrade the trade manager, we have to make this new piece of software. The good news is that we have offered it to existing trade manager owners at a substantial discount. So if you would like to get the trade calculator, I can certainly send you a link for that at the discounted rate. And no, Andrew, that's not entirely true. Andrew says everything about indicator warehouse is more money. You know, Andrew, if I could give it away, I would, but I can't. So I can offer it to you at cost, but that is the best I can do. Alternatively, you know, if you don't want to pick up the trade calculator, stay with Ninja 7. Now, I'm not being facetious about this. There is nothing wrong with Ninja 7. If it wasn't for everybody asking me 10 times a week, Eric, why are you on Ninja 7? Why are you on Ninja 7? I just got flat out tired of saying to people, I'm on Ninja 7 because I like Ninja 7. The only reason I upgraded to Ninja 8 is because Ninja 8 is the standard for NinjaTrader right now. And people looked at the trading room and they looked at the software videos and they saw Ninja 7 and they said, well, your software doesn't work on Ninja 8 or your software is old or whatever. That is the only reason I upgraded to Ninja 8, for the sake of the room and because I just got flat out tired of telling everybody all the time there is nothing wrong with Ninja 7. But there is nothing wrong with Ninja 7. In all honesty, and some people in the room may differ with me on this, performance-wise, Ninja 8 was supposed to be so much better than Ninja 7. I don't notice any difference performance-wise. The only thing I notice different between Ninja 7 and Ninja 8 is the graphics and that some of the software conflicts with Ninja 8. Because Ninja 8 was not an upgrade. Ninja 8 was a total rebuild of the platform. That's why we are having such a difficult time upgrading some of the software. So you can either stay with Ninja 7, and like I said, I'm not being facetious when I say that. If it wasn't for the trading room, I would still be using Ninja 7. And the other thing you can do is you can just use the chart trader. This comes standard with your NinjaTrader. You right-click on your chart, you enter your orders, you right-click on your chart, you enter your stop-loss orders, you right-click on your chart, you enter your profit orders. And, you know, it doesn't take long before you get a pretty good idea visually how much your risk should be so that you're not overextending yourself risk-wise. So long as you're risking less than 5% of your capital, you're usually okay. So if on one trade you risk 2.5% and the next trade you risk 3.5%, those are not the kind of trades that are going to wipe you out. The kind of trade that's going to do you damage is where one trade you risk or you routinely risk 10% or 8%. Those are the trades that when they go poorly are going to put a little bit of a dent in your account, which is not what you want. Yeah, Ron says you're not for Ninja 8. No, I'm not for Ninja 8. If I had my druthers, the room, everything would still be working on Ninja 7. I see absolutely nothing wrong with Ninja 7. That said, I was probably the last guy on the planet to move from Ninja 6.5 to Ninja 7. I am not the kind of person to, go for the new shiny thing. I much prefer to stay with the most stable version of the software. Ninja 8 is pretty stable now, but it still has issues. We still occasionally run across programming conflicts with Ninja 8. Ninja 8 obviously is not open software. It's proprietary. It belongs to NinjaTrader. So as a third-party software provider, we are at their whim. Oh, Ron asked the trade calculator. Yes, the trade calculator is for Ninja 8. The trade calculator is the new money management system for Ninja 8. Because the trade manager, which was with Ninja 7, has been impossible to program for Ninja 8. And I'm not exaggerating when I say impossible. Here's the deal. Here's the problem. So for those of you who are program type people, if you can crack it, I will sell it. But here's the issue. The trade calculator is an indicator-based program, which means it works on the chart just like your moving average calculations work on your chart. These indicator-based programs are much more stable. They don't, we don't run into nearly the same kind of software conflicts. They don't break down as much. Ninja, or pardon me, the trade manager, on the other hand, is a strategy-based piece of software. It essentially runs on the chart trader. This is very problematic. NinjaTrader, and I'm no programmer, but NinjaTrader did something to their new chart trader, which has made it, like I said, impossible to reprogram the trade manager. But the trade calculator, because it's indicator based, no glitches, no problems, works out of the box, does everything it's supposed to, with a couple of things the trade manager could do that it can't do, namely auto trail stops and pre-position your entry and exit. But there are advantages to the trade calculator as well. First of all, you still have your money management, which is very important. Muy importante. And you can use anything you want as a stop. So you can still use your parabolics. You can plot your parabolic SAR on here, just like we had with the trade manager. Right, so you can plot your parabolics. And if you would like the trade calculator to use that, your parabolics as a stop, so you roll through here to, click to stop on Indy. You hold your shift key and you highlight your parabolics, and now it has selected the parabolics as your stop loss. And it will still automatically calculate your position size. See how it's changes from 1 to 2. See, now it says I can afford 2 contracts. Oh, there I could actually afford 3 contracts. So it will still maintain your position size relative to your risk, which is what we want. I don't mind the default. I don't mind the ATR as a stop. So like I said, it's the best that we could offer, and the price is the best that I can do as well. Yeah, like Keith says, I was the same way with Ninja migrating from 6.5 to 7. Waited until the last minute until most of the bugs were found. What you don't realize in the software world, it used to be not that long ago that programmers would try to debug the software before they release it to the public. Not anymore. Because that costs money and time to have your programmers try to fix all the bugs. No, no, no. They send it out. They let you play with it. They let you find the bugs, and then they'll fix it. We don't do that. We're still old school. We try to debug our stuff before it goes out. But that ain't always the way. Andrew says totally unethical. Andrew, I admire your standards, but yeah, that's just the way the world works. It's not to say they don't try to debug it, but they won't find every last bug. And to be fair, they do release it as a beta version. And if you ever download a beta version, uh, you usually know going in you're going to find some of the glitches. Yeah, like Mark says, Microsoft, that's their MO. Absolutely. But like I said, if anybody is still using Ninja 7, please don't feel like you have to migrate to Ninja 8. I've told you why I'm on Ninja 8. I just got so tired of the question. All right, looks like we've got a little bit of a buying spurt going on now. So bullish out of the open, a little bit of a pullback, another bull move. Let's see, we probably got a signal printing here somewhere. Yes, we did. We had a nice little number 3 signal. Another trend change signal here, actually in the Falcon. Let's see if I can get on board with that one. So what I've done is I've just anticipated, I've got the warning dot. Oh, here, let me get this out of the way. I've anticipated where my signal will print. So I've got the warning dot. The signal hasn't printed just yet, but it should print somewhere near this swing high. And I would use this swing high anyways as my entry. See, there we go. Okay, so now again, a trend change signal, fairly high probability signal, looking for the market here once again to maybe try to get into that opening gap. Ooh, they're pushing back. All right, let's see if we can get any kind of follow through on this. If in fact the market is going to continue higher. See, we've got, let me bring my stop up a bit. We've got this kind of thing going on as well. Let's go here to the eagle. You'll see it a little easier. We have a little bit of a sideways range going on. So now's the breakout. This is the retest. In fact, I should have perhaps waited for this retest rather than try to ride it out. Oh, my stops may end up being a little bit tight here. So we've broken the trend line. We need to see some bullishness come back into the market now. Okay, we're getting a red bar buy. Back in the hard edge, or the first hard edge here on the Raptor. Oh yeah, Mark says nice late filter entry signal back here with some decent follow through. I was a little bit leery because this was the first break of this trading range, and it looks like it's going to cost me. Ideally, my stop should be 2 swings back, right? So there's swing 1, there's actually swing 2. I think I'll just let them tag me out here though. This might be all the buyers can muster. In which case, I'm going to get tagged out, and we will probably see a reversal signal. Andrew asked, DTS is really a breakout system, isn't it? No, not so much. You know, I tend to avoid breakouts. Here, I'll show you how I like to trade a breakout. First off, with the DTS, the diversified trading system, it's diversified in the sense that each program has been tailored for the market environment. So what that means is it's not like we have a 5-minute chart to scalp and a 15-minute chart for swing trading and an hourly chart for trend trading. Those are all based on the same common denominator of time. The programming that is behind the hawk has been specifically tweaked for scalping. Likewise, the Falcon specifically set up for swing trading, and the Eagle specifically programmed for trend trading. The Raptor, being a hybrid, incorporates elements of all three. Breakouts are tough. A good trading friend of mine always said, Eric, never trust a breakout. And he's right, because you get this kind of thing going on where you get the fake break. Now, if you identify a trading range, the market actually starts to back itself into a corner once you see the breakout. Now, usually I will do these kinds of trades from the Eagle because a longer term perspective is helpful. And I'm going to throw my order in here, and I will explain what's going on. So what I like to see is when a market breaks out, I know it needs to retest the breakout, and ideally once it does that, it will continue in the direction of the breakout. Once the market does make its breakout on the Eagle, I like to see 2 counter bars, and that is where I will place my buy order. I call it my just in case order to buy. So here the market has drifted. We're actually right back in the middle of the trading range, which technically makes it very neutral. The buyers should have recovered the market a little bit higher, but I now have 2 bullish bars showing me where the buyers are actually prepared to buy the market up. So at this point, I have the market in a bit of a tight spot. I have my upper limit, I have my lower limit. Here we're getting actually a rule of 3 signal now developing on the Eagle. That is our counter trend signal. If the market breaks down here, there is a good chance it will try to head toward the bottom end of this trading range. So I can preset my profit target. This is totally counter trend because this morning's trend does seem to be up. Okay, Andrew, a good question asks, because each market has a different personality, then surely not each bird is suitable for every market. What would be the best for crude oil? Because the NASDAQ moves radically different to crude, so a hawk 6-tick would not act the same. Well, yes and no. You are correct that each market has its own personality. And for that reason, I tend to be from the school that I don't think you need to watch a whole lot of different markets, especially if you're day trading. I think it divides your attention too much. But if you do choose to watch a couple of markets, say you're watching NASDAQ and crude and, I don't know, the Russell, the market personality is something that you need to become familiar with, but the signal generation itself is actually pretty standardized. A first micro macro cross in the NASDAQ will still be a first micro macro cross in crude oil. Now, regarding the brick size, that was a lot of trial and error. We actually spent, I like to joke around that it took as long to develop the DTS system as it does to give birth, because it took us 9 months of testing and tweaking to get the values where we were comfortable with them, which is why we came up with the default values that we did. Having said that, though, there's nothing wrong with you tweaking them to your liking. So if you feel that a 6-tick hawk on crude oil is not responsive enough, then try a 5-tick or a 4. Likewise, if you think it's too responsive, offering too many signals, the bars are unfolding so quickly you can't make a decision or get a trade in, well then try maybe an 8-tick or a 10-tick or even a 15. But the environment that causes a scalp trade to develop really is fairly universal. There's a lot going on here on the Hawk and all the software for that matter, besides what you see here. This is not a moving average crossover system. That's what you happen to see, but there are about a half a dozen parameters working behind the scenes here that have to be met. There's actually price parameters that have to be met for a scalp signal to develop. There's momentum parameters that have to be met for a scalp signal to develop. None of those things are seen here. But there are, visually the programmers want to make it look appealing rather than just, give you bars and, okay, here's a buy signal, here's a sell signal. But feel free to experiment. And then the Raptor, of course, it goes one step further. The Raptor allows you to tweak cloud parameters, bar parameters. You can tweak the daylights out of the Raptor. Okay, so here we go. We're kind of stuck now within this trading range. And notice I'm not getting too aggressive. Oftentimes I've considered, on these, when I get the 2 bear bars back, should I bring my entry order back in? So bring it from here down to here. But I usually find that it's best just to leave well enough alone. If the market's in a trading range, I really don't want to get stuck in the trading range. Although at the moment, we're coming back here with a couple of buy signals. We've got the red bar buy off the hard edge. We're coming back with just your basic with trend signal. So it looks like the earlier entry may have worked out all right. All right, let's see if they bring me in. And we'll just, all right, so they did fill me. So let's get a profit order in play. We'll delete that one. Here now, another breakout type move. But hopefully we'll see a little bit more follow through. What we've seen is we've seen the breakout, we've seen the retest. Now we're looking for the buyers to actually recover and continue the market higher. And where's my next resistance zone? Oh, nearby. So we'll try to take it up. We got filled at 52, I think. Oh, at 53. All right, well, let's not be too greedy here. Oh, yes, okay. I understand Andrew's question now here. It took me a second. Let me show you the Ninja, hold on here a second. I can do it from this chart. Okay, so with the new mean Renko bars, yes, you can select your trend and reversal. By default, your 6-tick bar on your hawk will be 6 by 6. Your 8-tick bar on your falcon and raptor will be 8 by 8. Your 12-tick bar on your eagle will be 12 by 12. This does allow you a little added tweakability, however. Trend refers to the body size of the bar. Reversal refers to the tail or the wick. But if you don't want to play with it, those are the defaults. 6 by 6 for the hawk, 8 by 8 for the falcon and raptor, and 12 by 12 for the eagle. Well, it looks like our early momentum has all but disappeared. I'm getting a lot of back and forth right now, which is not what we want to see. Oh dear. These two bullish bars should have had a little bit more follow through. Come on, next bull push. I'm going to get my stops up really quick. The Bollinger Suite already a little bit bearish here, which is, again, not what I want to see. So right now it looks like our best trade came early. And despite that enormous opening range gap, we're not getting, oh, there we go. Okay, let's get these stops up here. No! You stinkers. Scoundrels. I very likely got tagged too quickly on this one. So what I'm going to do is I'm going to look, we're producing a late filter entry signal, and I will take it above that last swing high. If it gets above that last swing high, okay, maybe they're not quite ready yet. I guess there's got to be a little bit of a bullish pushback here somewhere along the way. Okay, well, here we go. We got our number 3 signal developing here on the Raptor, about the same place I was looking at it before. We'll get that out of the way for now. So looking to enter above that zone, and I will try to stretch this out, see if we can't get it up to the next profit target, the next resistance zone right there. All right, there we go. Come on, doggone it. You know, we get these little hints of momentum, and then the market just stalls. I hate it. They should continue higher, however. Our Bollingers are back in sync, which is encouraging. We had the hard edge bounce, which is encouraging. Overall, the trend today does seem to be up, which is encouraging. But these little hesitations just drive me nuts. All right, I'm going to take a chance here and sneak that stop up to break even. I'm about 3/4 of the way to my initial profit objective, which is usually when I take my trade to break even. Okay, there we go. I would have hit the high probability profit target. Get up there a little bit more and I will sneak my stops in some more. Okay, at this point, I'm going to really put the squeeze on. All right. Well, not a bad little trade. Did make me think about it for a minute here when it was kind of getting stuck. But we should actually see the market try to continue a little bit higher. I think for this morning anyways, the trend does seem to be up. But I hope you can see the advantage of trading less. You know, trading really is the type of business where less is more. But let's say, for instance, that we had a 3 trade quota. Well, we've made our 3 trades on the day, 2 of them profitable, 1 of them not. So we're still down about $75, $80. So we've made our 3 trade quota, but we're not profitable yet. So I would actually look for 1 more trade and try to get into the black. Ron's asking, what are the defaults for DTS? We have a 6-tick brick on the Hawk, an 8-tick on the Falcon, and a 12-tick on the Eagle. Those are the defaults for 90% of the markets. The only market that tends to fall outside of those parameters is the E-mini S&P. And for that one, because it's at 1250 a tick, we have to go to the faster settings, which would be a 4-tick Hawk, a 4-tick Falcon, and a 6-tick Eagle. So 446. Ray's watching a 15-minute chart, says the 15-minute chart shows the bulls since the market opened at 9:30 Eastern. Yes, that does not surprise me. So we opened down here, big rally up, little bit of a pause through here, about 15-20 minutes worth, and another little rally higher. As we get closer to the bottom of the hour, if there has been a dominant trend during the day or the morning, very often we will see that trend try to reverse at the bottom of the hour. So that could be where we're at right now. Bollinger's here on the Raptor and the Falcon already full on bearish. Here we're actually getting a sell signal. We've already got the trend change signal here on the Falcon. And I'll just extend my my signal. So the signal actually printed right here. For a couple extra ticks, see, we're getting a repeat of the signal. For a couple extra ticks, I'll take it below that swing low. All right, well, there we go. So we got filled at 57. My high probability target actually 52. Counter trend trades, you always need to give a little extra room to. And if you were inclined, you could try to run it down here toward the next support zone. That would be a feasible target as well. Wow, just a little bit of hesitation here. It's to be anticipated. Remember, trend changes markets don't turn on a dime. There's always going to be a little bit of back and forth. A little bit of a test of the extreme is to be anticipated. Okay, working a possible late filter entry signal now. Oh, come on, green bar, get away from there. Usually we have a little better follow through on these types of bearish moves as the market attempts to get a little bit more bearish. I bet you we're near the hard edge. Yes, so we are. We're near the hard edge here on the Eagle and the Raptor, hence the hesitation. Oh, the evils of counter trend trading. All right, last chance for the sellers. They got to get something going on here. Okay, we're getting a little bit of a test of the extreme now. And again, I'm doing my best to be patient with this trade, giving it some room to turn around. I have capped my risk exposure with my trade calculator here. So we're coming back now with another little bit of a trend change. And the market has come up a long ways today. Still has a long ways to go to fill that gap, but it's come up a long ways. We'll see if the sellers don't try to take it a little bit lower here. See, here's the thing with opening range gaps. Get that out of the way. Okay, so if the market finishes here and then opens down here as it did this morning, there's the theory that the market will try to fill the gap. And that's kind of what we're seeing today. The market is heading a little bit higher. But the way you need to view this gap is actually as a very big bearish move, because that's what it is. It's a very strong bearish move. So even though today has been relatively bullish, overall the market is still very, very bearish, which is why I'm not opposed to trying to short it, because the big trend, the daily, does have a more bearish slant to it, even though the immediate trend does seem to be more bullish, if that makes sense. All right, here now the big test of the extreme. Looking for another bearish move lower. Come on, sellers. Ron says, is it just me or does your headset cut in and out? Well, occasionally I'll hit the mute button. Maybe that's what you're hearing. All right, sellers, last chance. Last chance to get this market to go lower. What I'm looking for is a decent move on the part of the sellers so that I can start to bring my stops in. Okay, that's looking more promising. Okay, I'm going to take this opportunity now to get the stops here to break even. I have hit my high probability profit target. 52 was the profit target. I'm trying to sneak a couple of extra ticks out of this one. Come on. Nope. Shoot. Should have just taken the profit on target. Okay, the trend does seem to be heading a little bit lower. We've got the trend change signal now building on the Falcon. We'll have a comparable signal. We'll have the number one signal probably on the Raptor. Oh, we'll have the early number one signal. We'll see if they try to continue lower now. So here's the trend line changing color. No, not yet. We have, gotta get rid of those lines that we drew in there. Okay, the market a little conflicted. We are making lower swing highs, so I'm still open to the idea of a short. So here on the Raptor, we may produce a number 2 signal. Once again, you could treat this recent business as a trading range. Here was your breakout, your retest. Here's the bottom end attempted breakout. So you could put your just in case order to sell. This would now be the retest of the attempted breakout to the short side. I know it can all get a little confusing sometimes. Paul's asking, can you explain again how to attach a stop to an indicator? Sure. Let's throw the parabolics on here. Where'd they go? Parabolics. Okay, so I'm going to use now my trade calculator, and I'm going to go here to the click on stop on indicator. Hold your shift key. Click on the indicator. And now it will use your indicator as your stop loss. The key is you need to hold on to that shift key as you highlight your indicator. So at this point, you can, if you're going to use the parabolics, you would just manually roll your stops down. As the parabolics move lower. So here, once again, if you're going to use the parabolics, oops, you could roll it down with that. And at this point, you could bring it in even tighter still. Or, you can leave your stop back. Well, it looks like the parabolics might have been the way to go. Take the early stop out. What's happening right now is the market is really in a little bit of a sideways twist. This does happen after a bit of a trend. So when you see a market make a strong trend, higher or lower, so we've had this kind of day today where it went up, went sideways, went up again. It's not unusual to see the market enter a bit of a trading range, very likely for the remainder of the day. There may be, going in toward the close, a little bit of a pullback of sorts, but this is to be anticipated. After a strong move, don't expect a huge reverse. It can happen, of course, but it is unlikely. Rather, it's more likely that the market will remain sort of range bound. And like I said, I think that's kind of where we're at right now. Okay, let's get rid of that. All right, looks like all the best opportunities came early today. And here we are again near the top end of this trading range that we're kind of looking at. All right, everyone. I think we're gonna, okay, Paul says that doesn't work for me. All right, let's just walk you through it again. So let's say we're gonna use whatever. Here, we'll use the, does this have its own panel? Okay, hold on. Got to find one that's plotting. Where's the parabolics again? Why am I having such a difficult time here this morning? There it is, parabolics. I don't remember my alphabet. Okay. All right, so what you need to do is you need to turn on your trade calculator. You need to click your stop. So stop on indicator, no indicator selected. Move your mouse over your indicator of choice hold your shift key and left click. And when you let go of the shift key, it will select your parabolic. If you still have issues with it, please send an email to Ben. He'll get you squared away. All right, so hopefully that'll work. All right, gang, I will see you again tomorrow. We'll talk to you then. Bye for now.